do a quick little exercise around demand today. So I thought I would check in with everyone, see how everyone's going. Nice and simple lesson today around really the idea of demand, where it comes from, what we look for when we are assessing demand, and I'll talk you through it. I really just use a very simple formula when it comes to demand, understanding that in real estate there are life stages. As such, you've got startup stage with real estate, a trade up stage, really the downsize market or down trading. Hey, Alison, good to see you. So where does demand fit into this equation? So we know that there is a startup market, a trade-up market, and really a downsize marketplace when it comes to owner-occupiers. When it comes to really the idea of money, when money goes down in value, certainly more people come into the market, and that's very evident at the moment. So I like to explain there are a few different target audiences in the real estate economy. The first is the first homeowner, and the second is the upgrader. The third is the downsizer. Then we have the investor. Then we have the FIRB, which is the foreign investor, if you like. Now, when a property boom is going on, basically all of these groups are shopping at once. And really over COVID, over the last sort of 12 months, definitely 4 of the 5 have been shopping at once. We've had more first homeowners jump into the market than, you have to go back, I think, till 2009. Upgraders, obviously, people choosing a new transformation, a lot of people internally migrating. What we have seen as well is a lot of downsizers, a lot of people pre-buying their downsizer, which is even complicating things first. And of course, investors who absolutely see the best use of their money being in assets and out of the bank have all jumped into the marketplace. But in a more normal market, you would find that not all of these groups shop at once. And that quite often, when we go through a period of stagnation, when the market starts to sort of slow down and slows up, what's happened is usually some of these groups get removed from the marketplace. So probably the group which looks like it's going to get removed from much of the market at the moment kind of looks like the first home buyer market. Really, 2020 was the best year for first home buying. There was a lot of free money, a lot of grants, a lot of free stamp duty savings, a lot of state government grants. Still about a little bit, but with the serviceability adjustment, which has just taken place, really the group probably most impacted by that would be the first home buyer marketplace. So this market, if you like, is cooling a tad. Now, I like to score this stuff out of 5. If 2021 or 2021, if we went to first home buyers, I would have scored them 5 out of 5 in 2020. Now, I'd probably score it about a 3.5 in 2021. Starting to taper off, and that's not such a bad thing. When it comes to upgraders, though, and this is the market where everyone's basically trading up, they've got a little bit more buying power. They may have sold a property and they want to buy another property. Certainly in 2020, I would have scored that a 5 out of 5. And this year, probably more of a 4 out of 5. It's definitely starting to ease up a little bit, and that's also not such a bad thing because obviously, we want prices to be relative so we can all buy the real estate. Downsizes, this marketplace is just going from strength to strength, to be honest with you. What we're seeing is people pre-downsizing, which I've never seen before. Certainly, I would probably score that a 5 last year, and equally, I would say it's still very much a 5. There is, for the market that is on the move, a very, very encouraging sort of sign of people buying up anything that is downsizer-esque. I certainly do not see downsizer product sitting on the market at all. Then you've got the investors, and probably in 2020, sort of if you call this June 2020 to June, July 2021, investors were probably about a 3.5 in 2020 to 2021. Now they're more up to 4.5. So big scores across the board in 2021. Ferbs are a little bit restrained from the market at the moment, and certainly in 2020 you would have scored them a 1, and you'd probably score them a 1 this year. So if we look at the local market, and to be honest, we don't want the Ferbs because there's not enough stock for ourselves, let alone international buyers coming in and taking all our real estate. We can see if we remove the Ferbs, sort of last year, I would have scored the market out of 20, I would have scored it 18.5. This year, what have we got? We've got a 5, we've got a 4.5, so that's 9.5. We've got a 17 out of 20. So big scores, and the appetite out there is pretty big. So really, probably what we think is the equity lock position where you probably need to lock in your gains. More or less started 2023. If we were to fast forward in 2023, would the first home buyer market be shopping? Would the upgrader market, downsizer market? We'll probably have to look in a year, but certainly for the last 2 years, lots of strength in the different sort of categories that buy real estate. All right, that's it from me. Thanks very much for your time, guys. Thanks for tuning in. Alison, as always. I'll catch you later.